Well, Ernie, glad to have you here. Thanks for joining us. We're just excited to be able to have you share who you are, what you do, and how do we get to be part of DreamMax and participate. I know you mentioned Tori Sakala might be joining us as well, so I'll leave it up to you to see if we need to start right away or wait for him to show up and go from there. But the opportunity is that we want to invite you to share who you are, what you do, what's going on with DreamX, what's your ask from us, either participation consulting or investments or connections, and of course the opportunity for us to just engage with you. We'll have a Q&A after your presentation, and then we'll get the chance to know each other and provide any context that you need to. So Ernie, please say hello, and the floor is yours and the screen is yours and the world is yours, and let us know how we can be part of it. Ernie Flores.
Thank you, guys. It's a pleasure meeting you today. I will assume, Rocky, that you already kind of shared some information, so there is at least an idea what is the Dream Exchange about. Is that correct?
I have done that. I put the link to your platform, which is a wonderful platform, and everybody's excited. So, but we'll find out what the questions are if the excitement stays there. So, Ernie, go ahead.
You're setting up the expectation high. So, and for me, I can talk about Dream Exchange for a while, and I could be a little bit too much enthusiastic. But if you don't mind to share, you guys, what would be your orientation on this? What would be your interest, or where are you based? So I have an idea what my audience is on this.
Well, these are all investors and consultants, but all of them here in the US and have an interest in participating. Why don't we hold off on that, because that could take a certain amount of time and I want to be respectful of time. Let's get right into the showcase. We will do a discussion afterwards, but these are people that are understand funding, understand investments, and understand working with businesses. So you can share your
So let
screen.
me pull some up here so I can I share my screen here?
You can. Go ahead.
Okay. Do you see that?
Yep, we're good.
Okay, good. So one second. Okay, good. So Dream Exchange, as you might know by now, but I will give you a kind of an overview. The first, the main points, and then we can go into the details. So Dream Exchange is a new stock exchange coming up on the market. There is 7 stock exchange in the US right now. We will be the number 8. And the expectation is we should go live at some point this coming summer. We don't have a set day, and I will give you more the details on what it's all about and why not and so on, but it's kind of the expectation. What I'm sharing with you now is who are the head of the Dream Exchange. Dream Exchange have been in the working for a few years now, and it's an idea that came originally from Joe Sikela, civil rights lawyer, CPA for many years. He was the lead of the legal counsel team that put together one second, I have a text here. Tori might be able to join now.
Tori's with us now.
Okay, hi Tori, are you there?
Yes, I'm here.
Okay, good. So I was just kind of getting the introduction on the subject. Tori have been with the team for a long time as well, and is senior on the level of the company that would be probably having an overview, even with more information on what I was about to start getting into. So Tori, you want to take it from there?
Yeah, if I could, though, obviously I missed the first meeting, which I apologize for, but if I could have a little bit of background on everybody on the call.
These are all investors and consultants, Tori, and just being conscious of time, we want to get into the presentation so that we can have questions and answers afterwards. That way we know more about you. And I think this is more about you at this point so that we can find out how we can step in, either from an investment standpoint, consulting standpoint, or being able to refer businesses to you. So go ahead, Tori.
Okay, great. So I will jump in and just stop me whenever you have a question, and I can answer it. So as Ernie was mentioning, the two founders, so Joe Cicala originally founded the company. He was a civil rights lawyer, securities lawyer, CPA for over 30 years. One of his clients was actually starting a company called Archipelago in the 1990s. Has anyone heard of Archipelago before? Yes. So
Okay.
basically, Archipelago, the first company to consolidate orders to buy and sell stock from across the country and execute them in one central electronic communications network. So that system was the formation for the national market system. So today, all of the stock exchanges in the United States are connected to the national market system, and they have to provide by law the best bid or the best offer for any stock at the given time that you're placing the bid or offer. So from a legal perspective, that marketplace was created by Joe back in the 90s. After he left Archipelago, he went into small business transactions. He did over 100, fundraising rounds for small businesses with venture capital firms and private equity. He did a number of IPOs. And he ultimately published a lot of research on what was going on in that market in the Oxford University's Handbook on IPOs. And I'm going to get into some of the data in that. But that really informed a piece of legislation called the Main Street Growth Act, which fixes some of those problems and is the basis for starting the Dream Exchange. Now, in that work with small businesses, he met Dwayne Kyles. So Dwayne is the son of the civil rights icon, Reverend Samuel Billy Kyles, who was in Memphis, Tennessee in the 1960s. He was actually in the Lorraine Motel with Martin Luther King when he was assassinated. And so Dwayne brings a lot of that, civil rights cachet and the communication lines from that time. And so that also informed everything that he's done. So he went to Johnson Products Company. He was a lawyer for them when they went public. He also worked for Mayor Harold Washington in Chicago, helping small businesses get access to capital. So they really formed a bond over trying to help these businesses over the last 30 years. And that is what made it a logical partnership in starting the Dream Exchange. So Ernie, you can go to the next slide here. Or if you want to just allow, okay, that's fine. So this slide shows you a little bit of the significance of, obviously a lot of this information is stuff you guys probably already know, but I want to go into the significance of having a minority-owned stock exchange. So this is how money flows through the stock market today. The general investing public provides funds either through an asset allocator, a 401k, or a pension plan, or through retail investing. It's about 80-20. 80% of the funds is managed by asset allocators. It's about $37 trillion in assets that are managed by CalPERS and the Thrift Savings Plan and Texas Teachers and all of those very large pension plans. Now, those pension fund managers have to hire a broker in order to actually buy and sell stock. They don't have a connection to a stock exchange that they can route orders to. Now, when they're when they're hiring a broker dealer to manage their money, one of the things that they look at is the diversity spend of the broker. So those brokers are required to have up to 10% minority spend in order to even do business with a lot of those asset allocators. And so the brokers, in order to meet that demand, most of what they do is they hand funds over to another broker that is a minority-owned broker who transacts on their behalf. Now, that doesn't really benefit most minority communities, except for maybe one or two people who own a brokerage that are minority individuals. What we're looking to do is start a stock exchange, and we'll be providing the first ever trade execution service to broker dealers from a minority-owned business. So that's a very strong incentive for broker-dealers to route orders to us. And we'll also be working with them to really expand the participation in company ownership in the national market system. So you can go to the next one. The size of this market, there's about 3 trillion shares that trade every single year. And exchanges charge about 1/1000th of a penny every time a stock transacts. And so that's approximately $3.3 billion in revenue. That's split between, mostly split between 3 companies, the NASDAQ, the New York Stock Exchange, and the CBOE. So those 3 firms have about a 93% hold on the market. And Ernie, you can go to the next slide. Now, that oligopoly, for lack of a better word, is not particularly well viewed by the customers in this market. So those firms you see at the bottom, they account for the vast majority of trading that happens in the United States. And in 2020, they started their own stock exchange to compete with the other exchanges. So that was obviously a very disruptive move that they made. And for good reason. So basically, the main points that were changed by Members Exchange were in relation to the technology, firstly, because those top 3 exchanges were built originally over 20, 30 years ago. And they've been updating their systems over the last 20 or 30 years. But if any of you have a experience with technology, it's a lot easier to build something correctly from the beginning than it is to update something that was built incorrectly. So the Members Exchange being built in 2020 is a lot more efficient. It's a lot more effective from a technology perspective than the other exchanges. And one of the ways that that manifests itself is in the pricing. So the other 3 exchanges have over 3,000 different order types, all of which have different pricing associated with each different order type. And there are about 5 billion shares that are trading constantly every single day. So you take that 5 billion, you multiply it out by 3,000 different types of orders, each of which have a different price. And as a broker, you have virtually no ability to predict what the cost of your trade execution is going to be. It's a very complex system. So the Members Exchange, when they opened, had a very simple model. If you're looking to buy stock, you get one price. If you're looking to sell stock, you get a different price. And they have all the different order types, but the pricing is very simple and consistent. And so I'm highlighting Members Exchange here because we have a service agreement with them. They've actually provided their entire exchange software to us. And that's sitting currently on a server in New Jersey that we own. So we're essentially a mirror image of their exchange. And so in addition to being the first minority-owned firm that provides a very strong incentive for brokers to do business with us, we can answer every question that they have about our system, how's it going to work, how are we going to connect, with just saying it's the same as Memex. It's the exact same way that you're doing business with Memex, right? And so that can kind of check a box in their head where we don't have to worry about the execution quality or whether or not our orders are going to get lost somewhere in a system. Does anybody have any questions up until this point?
No, I like where you're going with this, Tori.
Okay, good. All right, so now all of that is very good, and you can see from the numbers on the screen that that's a profitable business to run. Having an exchange license is like having a license to print money. You don't have to do a lot, and you can make profit doing it. But none of what I've just described addresses the problem of access to capital for small businesses. So if you go to the next slide, Ernie, this is kind of the current landscape of our markets. There's about 6,300 companies that are listed on stock exchanges in the United States. Less than 10 of those companies are minority owned. It was, I think, 10, and then a few of them got acquired by other firms, and it's now dropped below 10. Now, the societal effect of that is 92% of all the jobs within a company are created after that company goes public. Ernie, if you could move the mouse so that they can see. Nope, go back to the other slide. just move the mouse so that they can see the stat there. So yeah, 92% of all the jobs within a company are created after the company goes public. So, you know, while we're discussing in our society today a lot of different ways in which we want to increase financial opportunities and economic outcomes for minority individuals or people from different communities, nobody has really fully addressed the problem of there are not a lot of very well capitalized public companies in these areas that will be able to provide living wage job opportunities. Because it's one thing to say, well, we're going to raise the minimum wage from $12 to $15. And that's great, but you can't raise a kid on a $15 an hour salary anyways, right? So what's really going to solve the problem is having really good career path living wage job opportunities across the entire United States. I live on the North Shore of Chicago. If anyone's familiar with the North Shore of Chicago, it's one of the most affluent, prosperous areas in the entire country. There's very low crime. There's very good schools. It's one of the best places to live in the United States. There's 30 to 40 public company headquarters within 20 minutes of our office here in Des Plaines, Illinois, Rosemont and in Winnetka and Wilmont, and all of these neighborhoods have Kraft Heinz and Allstate, and there's very large public company headquarters that are employing 80, 90,000 people, you know, with very good salaries. So we want to create that across the country. Now, the next slide goes into a little bit of why has this problem persisted, right? Because obviously there's a historical reason that there's not a lot of minority-owned businesses, but that barrier's been removed for a number of years. So why hasn't there been this massive expansion in public companies? Well, in the 1990s, and this goes back over 40 years, the vast majority of IPOs were $50 million or smaller. That light blue portion of the graph is small IPOs. The dark blue is large IPOs. So the business model of a stock exchange, when you can only trade 200,000 or 300,000 times a day, is you want to get a lot of new companies listed in your market because you make money every time you list the company. You make a small amount of money every time you trade, but there's not a lot of volume. So the focus of stock exchanges was how many IPOs can we do? When electronic trading was introduced, you can now trade 5 billion times a day. So the incentive becomes, how can we find one company that will trade 5 billion times every day and will make residuals off that volume? And they really now make more money off of doing one very large IPO than they do off of doing $250 million IPOs. Because it takes the same amount of work to do the IPO, but there's not a lot of volume after the first trading day. So the market moved away from small IPOs. Then in 2008, 2009, 2010, you have Enron, you have WorldCom, you have these other regulations being implemented that make it very expensive to go public, on top of the fact that exchanges don't want to list you. So for that reason, for the last 20 years, the IPO market has been essentially dead, completely dead. And what that does is, in addition to the fact that all those companies that are, you know, the light blue portion of the graph in the 90s, those companies still exist. They're still looking for capital, but there isn't this public capital marketplace that they can go and get access to. In addition to that, the everyday investor is not able to invest in, you know, your next $50 million unicorn. In 1987, Microsoft went public. It was a $61 million offering. And you could have put $1,000 in Microsoft in 1987, and today you'd have $1.2 million. The only people who are capturing that delta right now are high net worth individual investors, venture capitalists, and private equity firms. So the everyday investor has no access, and it's not really it's a good store of capital. I mean, you can put your money in the stock market and it'll exist tomorrow, but you're not really seeing a massive amount of wealth being built by investing in IPOs. So how are we going to solve that is the next slide. We have a number of phases that we're going to be introducing this solution, but the main solution to that problem is phase 3. So we have piece of legislation that's in the Congress currently. I have some very big news on the progress of that. But first I'll explain what it is. Basically, this will create a new type of stock exchange called a venture stock exchange. And what a venture exchange will do is it will be able to list a company from as small as $2 million, and that's in the offering size. So a company raising $2 million up to as large as $2 billion. So all those 20, 40, 50, $100 million companies that are out there right now raising capital under Regulation A or Regulation D will be able to list on a stock exchange, and the investors will be able to have secondary liquidity on their investment in these privately held firms. The market is also really tailored to a smaller business. So a lot of the things that would be damaging, like short selling or having very small tick sizes, all those things can be handled in the venture exchange. We can customize the tick sizes of companies, so the stock price will only change every 10 cents, or we can have periodic trading rather than continuous trading. So a small business that doesn't have some activity happening every single day, maybe it only trades once a week. You can also have there's a very different reporting requirement for companies that are listed in the venture market. So, where today it costs about $1 million to maintain your public listing, it'll cost somewhere between $100,000 to $200,000. So we're maintaining sort of a minimum standard of reporting for these small companies and oversight without crushing them financially with audited financial statements and all of these things that most small businesses will not be able to afford. Does anyone have any questions on the venture market?
No, this is good, Tori. Really appreciate it. We've got
I
Jason
do.
Gale has joined us. Go ahead.
Yeah.
Bob Norton here. I was one of the founders of Thompson Financial Services, which is now Thomson Reuters, and built 5 different products for the financial services industry, including Autex, which was the block trading company that something like 90% of trades went through at some point, one of my products anyway. My question is, I'd like to hear you compare and contrast this to crowdfunding a little. I understand you're an exchange and you're providing quicker liquidity. Is there another difference? And, hasn't the move of the Regulation CF and the raising of those limits to, I forget what the number is now, is it $50 million or $20 million that you can raise? And obviously you're adding the exchange and liquidity component, but I have 2 problems. One is this minority company focus, which you've just said is 0.2% of the market, and how you get around that. And the other is, where's the value added beyond crowdfunding? Because you're saying one of your missions is to give Joe Average access. And I don't believe what you said about Joe Average not having access, because anyone can buy 0.1% of a share nowadays with Robinhood and all these other things. So
yeah,
I don't know if I'm missing something, but why don't you respond to that?
No, that's good. So I'll answer each of those individually. First, on the crowdfunding point, the limit for crowdfunding within a 12-month period is $5 million. So that amount of capital doesn't really suit the vast majority of companies that are looking for, a mature company looking for 20, 50, $100 million. They're raising under Regulation A or Regulation D today. That's what we're currently, our capital raise is a Regulation D, and we're raising about 50 million. So we're a good example of a company that crowdfunding can do nothing for us. We need a lot more money than crowdfunding can provide within a 12-month period.
Not for you, but for, I think what he's asking you is Dream Exchange competing with crowdfunding?
No. So they're actually going to be a very valuable on-ramp because we don't believe that very many companies at $2 million are going to be listing on the venture exchange. We believe that our sweet spot is going to be somewhere around between 20 and 50 million. The vast majority of companies that we list will be raising between 20 and $50 million. The main reason I say that is because the reporting requirements that are required for a registration, regulation A or A plus capital raise, which is a $20 million limit within a 12-month period, those companies and the regulations that they have to follow will be the same. Like their registration as a regulation A company will automatically allow them to list on a venture exchange. So all of the, compliance documents that they have to complete in order to file as a Reg A offering will be the same, compliance documents they have to file to be a venture listed security. So many companies in the life cycle will probably go crowdfunding. They raise their first $5 million in 12 months. Their next round after that, maybe 15 or 20, or maybe even 50. They'll come to a venture exchange and list in order to do that raise, right? So it's kind of a next stepping stone in the process. In addition to that, there will be companies that are currently in the OTC markets that are kind of suffering for lack of being listed on an exchange that will find value in at least, the businesses in the OTC markets that are currently in compliance with their, reporting. There's about 5,000 OTC companies and about 2,000 of them are in compliance with their reporting requirements. Those 2,000 companies will be able to list just as they are today. They're called small reporting companies. That is one of the classifications of listing on the venture exchange. It's one of the list tiers. Yeah.
So I have a lot of questions. I'm interested in seeing this be successful. I work with federal funded innovation and then a venture studio that produces startups, right?
Oh, wow.
And I do care about the minority mission, and I work with HBCUs, and they also would enjoy the benefit of this. But the benefit to me is you're establishing a liquidity and a currency like a SPAC would do on the big markets without the cost of running a SPAC, without the restrictions. And if I can use the venture stock exchange to validate the startup
Absolutely.
and provide transparency, and then I can use that stock to go make add-on acquisitions or to recruit the talent that I need to develop out the company. So for me, I look at the value of the venture stock exchange as high. My question for you is, how much is it going to cost me to get onto the exchange as a startup, and let's say as a pre-revenue startup that has, perchance a federal contract? What do I have to do? How much is it going to cost to list my opportunity on the exchange?
It's a great question. I do want to address just for 1 second, and I'll circle right back to that. On the minority issue, we are not exclusive to minority-owned firms.
Right.
I want to make that abundantly clear that we are about all small businesses that qualify. There's no exclusion of any specific community whatsoever. In addition to that, so as far as the cost, there are a few different tiers. There are 3 tiers of companies that will be able to list. One, the largest tier is small reporting companies. So these are existing public firms that are currently not listed or even listed, but want to delist from their exchange and list onto the venture exchange. So a small reporting company, the cost to be a small reporting company is a little bit more, but they're a public firm, right? So they have the benefits of being a public firm. The second is a early stage growth company, emerging growth company. These companies are currently raising under Regulation A for the most part. Doing a Reg A filing it can cost anywhere from $70,000 to $200,000. It's not a ridiculous cost of capital, especially because most of those companies are raising $20 million. So that's probably one of the areas that your businesses would fall into. And again, the $20 million is not, it has nothing to do with revenue. You could be a pre-revenue, never
Right.
sold a thing in your life, but you're raising $20 million on the merits of, like you say, you have some outstanding government contracts or something that you're, applying for, or like the medical device industry is a great example. Getting a medical device onto the market is a very expensive thing to do, and you
Right.
can't sell a damn thing until you get, all your approvals and everything else. So they're oftentimes raising $50 million in their pre-revenue. So those types of businesses would probably be emerging growth companies. Then there's a new one called an early stage growth company. That is the much smaller contingent of businesses. So again, it's probably a similar cost to what you would do in Regulation A, $60, $70, $100,000. The specific listing requirements are yet to be released because the bill has not been passed. Once the bill passes, we'll be working with the SEC to develop listing rules that will define much more exactly what you need to do in order to prepare to list. So I don't have any information on that I can release. We have an idea of what we want to do, but until it's like validated to some greater or lesser degree by the regulator, we can't really just send it out. So I hope that answers your question.
It does, and certainly I'll want to have another conversation with you about shaping the onboarding requirements.
Yeah.
Our software allows us to do a lot of tech validation and market validation. Anybody who is used to dealing with VC and private equity, the standard is you get a Q of E. Well, the reality is that doesn't tell me anything about whether or not this opportunity is going to be successful. So I'm interested in aligning our two practices.
Yeah. We have a similar concept as well. We've actually trademarked our equilibrium pricing, which is
Okay.
It's a similar evaluation process that we used to be an investment bank. So prior to being a stock exchange, we were an investment bank. We had our own proprietary system of evaluating companies, and we trademarked it, and we'd love to talk about that with you. 100%.
Okay. My only other question is, my lobbyist told me once to be careful about, making the law work well, because you're just opening up for your competitors. Who are you competing with to start a microcap fund or a microcap exchange?
It sounds like a lobbyist for sure.
Yeah.
So basically, right now there aren't any other venture exchanges that are popping up. The long-term stock exchange is going to have an intention to open a venture exchange. They are probably not going to beat us to it because we wrote the legislation. The NASDAQ has a product called NASDAQ Private Markets that they're probably going to evolve into a venture exchange. Their target market is very different from ours. NASDAQ Private Markets, I think it's somewhere in the range of 70% of the firms are larger than $500 million in market cap. Some much larger firms than what we're going to be going after. So the NASDAQ is going to probably have one. Long-term stock exchange is probably going to have one. Eventually, most exchanges will probably open one. The one important thing about the venture exchange, which I completely forgot to mention, is there are no unlisted trading privileges. So if we list a company, we are the only exchange that's allowed to trade their stock. So it's very different from the national market system today, where you could be listed on the NASDAQ trading on any exchange. And there are a lot of exchanges that don't even do listings. They're just secondary trading apparatus that are just kind of existing to handle order flow. That will not be a thing in the venture market. You have to list a company in order to trade it. So, being first to market, we have some very significant partnerships in minority, business institutions like the National Black Chamber of Commerce, the National Business League, the Minority Supplier Development Council. So we're going to have a lot of firms as a pipeline through those partnerships. It's it's going to be like a fire hose. There's so many companies that are qualified that there's going to be a lot of space for a few exchanges, and probably the best thing would be to have multiple, because the exchange is going to have a lot more hands-on interaction with the business than it does currently, because you're talking about smaller companies where we're going to have to personally do a lot more work to regulate them than in the national market system. When you're dealing with Procter and Gamble, you don't need an exchange coming knocking on the door to make sure that their reporting requirements are in. They've got $1 million payroll of people that are just solely dedicated to maintaining their public filing. So that's not going to be the case in the venture market, and we'll probably have a lot more hands-on sort of interaction with our listings.
How much are you raising now?
So the current raise is 45 million. We've raised about 15, and we really need about 6 in order to open.
Okay.
So
And
it's not a lot.
when do you expect to hear on the legislation?
So we actually had some developments on that in the last 2 weeks or so. The bill was introduced by Congressman Emmer, the Republican. He's the majority whip in the House. In the Senate, it's introduced by Senator Kennedy, Louisiana. So most of our work has been on the Democrat side. And we finally now, as of Wednesday, we had a meeting with Maxine Waters and got the green light for getting introduced in the committee, in the House Financial Services Committee. So we're looking at May for our committee hearing and vote. And once we're through the committee, we'll be onto the floor. So we don't think it will be a massive stretch to say that we could be voted on in both the House and the Senate in this year. And we have bipartisan support. So passing, we're very confident about. We've passed through the House and the Senate in the past. We were attached to the spending bill in 2018 that was not signed into law because of the border wall funding.
Right.
So we passed in that package. Right now, we're looking at passing as a standalone, because Congress is just so divided, and we're actually not a bill that has disagreement. So if we attach ourselves to anything, there's bones of contention in some other line of some other bill that ends up ruining it. So we're just going to pass as a standalone. And we're pretty confident that'll happen this year.
So, Dory, how will you avoid the long-term problem of a high failure rate of these companies? Because, the root problem here is, 80% of the companies that try to raise capital don't deserve to raise capital because they lack a management team and a vision and sustainable competitive advantage and all of those kinds of things. I can see this passing and then becoming the dog exchange because there's such a high failure rate. Everyone knows 80% of venture capital backed companies fail. And in theory, they have some advantages over just listing yourself.
Sure. Yeah, that makes perfect sense. So I mean, my counterpoint to that would be, if they're failing anyways, what is the difference if they're listed versus not listed? Right? Like if you're investing in a private company today, first of all, there's no oversight in the information that company is providing to you. So you actually don't even know if they're a legitimate business, because they could be lying to you in everything they're saying. There's no oversight in the private markets. Secondly, you're going to people are making these investments anyways. We're just talking about being an exchange to facilitate the investment. So the 20% that do make it will be.
Yeah, but that's not really the question I'm asking. The question I'm asking is, how do you not become the dog brand of exchanges.
I understand that. Okay. Yeah, I mean, we have an evaluation process that companies will go through, and if they meet the listing requirements, then they will list on the exchange. So
And-
Devil's in the details of that.
it is to each investor's
No.
volition as to what company they invest in, and if they choose to invest in a company that doesn't have a sound business plan and they lose their money, then they would have lost their money whether the company was listed on the exchange or not.
Have you done any work trying to get the mutual fund companies that would be looking for small cap deals to become anchor players?
Yeah, so we
I would
started.
actually answer Bob's question directly.
Sorry?
It would answer Bob's question directly. If you knew that your investors that were supporting the companies that were coming on were active investors, right? They were active board members, etc. Then the due diligence by the mutual funds that are playing would in fact improve that 80% to a much smaller failure rates.
Yeah, I mean that's definitely something that we can look at. Like I say, we're right now in the big focus of our company right now is opening our national market system exchange and getting the legislation passed. So
And if the legislation passed, if the legislation did not pass, do you have any kind of contingency plans? And I'm thinking about one already, so I'm curious.
Yeah, so I'm very open to hear that. What we're probably going to do, if I can just share my screen. From an investor's perspective, what we would do is just operate this national market system exchange, which is going to be, you can see my screen right now, right?
We're still seeing the same public market access.
Oh, okay. Ernie, can you
I
stop?
probably need to stop sharing here.
Yep.
Okay, good.
Yep.
So these are the numbers on just operating a national market system secondary trading market. So we would continue to do this and be a very successful company while we just reintroduce the bill every year until it passes. In addition to that, we'll be tailoring our national market system listing rules to try to expand a little bit the companies that we're letting into the market. So, we'll be doing whatever we can in the national market system. But I'm interested to hear what's your thought on that?
Well, and I work in the AUKUS space, which is the trilateral trade agreement and innovation agreement between the UK, Australia, and the United States. And there's a desire for a lot more co-investment in emerging capabilities, and it's really that that high risk stage that Bob was talking about, from pre-revenue to Series A, and just having a exchange infrastructure for the private equity funds, the venture funds, the family offices to participate in the same types of deals, but where they could mutual fund them and spread the risk of across a portfolio, and let's say artificial intelligence research, right, or that medical device research that you were talking about earlier. I would think that there would be a need for that venture exchange to exist anyway, whether it's to the public markets or it's a private exchange.
Yeah, I mean,
that's a brilliant idea, Jason, because then they don't have to have these negative markdowns on every financial report they file, because they're investing in 10 or 20 of these at once instead of one.
Right.
Yeah, and that's definitely going to happen, because also we're intending on having tens of thousands of companies list here, and probably most of the investments that are received by the individual firms will be as part of a sort of a fund or a fund of funds. Another aspect of the venture exchange that's going to really open up access to capital for these businesses is, those pension funds and the very large 401k fund managers are very restricted in what they can invest in. They have to put their money into marketable securities and things that will be able to be resold. So once we add a lot of these businesses into a venture market where their security becomes liquid, that frees up the capital from pension funds and things like that to be able to come into the venture market. And a lot of those funds and indexes and things like that will be big ways that they invest. So these are great questions, and thank you guys very much for asking them. I do have another call I've got to jump to, but we have a private placement memo that oh, okay, that's fine, Jason. Do you want us to send you the private placement?
Yes. Yeah, and I want to get on your calendar. I just I'm leaving for London and my dad's in the hospital, so I have to jump. But
Absolutely.
I do want to talk to you in a week or so.
Absolutely. We'll reach back out.
All right,
I'd
thanks,
like to talk
Rocky.
to you too, Jason. I
Thanks,
sent you,
Jason. Perfect.
hit
Thanks,
you up
man.
on LinkedIn.
All right, perfect. Thanks.
Yeah, go ahead, Tori. If you want to finish the slides that you had before, or how much time do you have left?
I have about 2 minutes, so I just wanted to see if everybody would like to receive the PPM.
Yes, yeah,
Consider
I'll put it
the
on our
investment.
site.
I would also just quickly, is there a way for us to make money with you guys? I mean, what are you looking for from us?
In the immediate term, the only thing that we really can do is accept an investment. We're just at the stage right now where we're looking for equity investors in the company, and we're not able to like do very much until we're licensed as an exchange. So
How much are you seeking to raise total?
so the total raise is 45 million. We've raised 15 of it, so there's about 30 left, or sorry, 20 left, and we really only need about 6 million in order to get the exchange operational.
Would you consider any type of loan on that, or do you have to do an investor?
The current offering is just for investment. We're not really seeking any loans.
Gotcha.
But
Thanks.
the 6 million is additional on the 15 you've already raised, right?
Yes.
Yeah, okay.
Yeah, and that'll get us. We're in our final talks with the SEC on our application, so we expect that'll be filed in the next few weeks, and then that puts us at opening probably in the summer, because the SEC has been reviewing our application since August. So
Good. Good. All right. Well, Tori, we certainly appreciate your time and sharing that with us. And I did record most of this, but certainly if you could send the deck to us, that I can share with our other team members that are not here.
Sure.
And
yeah, and I can send the PPM out as well, but it will come from a data vault called Digify.
okay,
So DIGIFY, that's where you'll get the PPM, and we'll also put the presentation in that data vault if you'd like, and we'll send that over to you.
that'd be super. Really appreciate it. And obviously I'll follow up with Ernie as well too for any other details. And people do want to get a hold of you and follow up on this. This seems like a wonderful journey for us to participate in, not just from an investment standpoint, but also bringing people and referring them to you, as well as being able to work together, as Ernie mentioned, a referral program where we create a database of consultants that can tap into those member clients.
Absolutely, that sounds great.
Very good. Thank you, Tori.
Thank you, gentlemen. Bye-bye.
Thanks,
Thank you.
everybody.
Thank you.
Take care. Thanks, Rocky.
All righty. Ernie, you going to stay with us?
No, I'm leaving now too. I'm jumping on another one. Thank you.
Okay.
Thank you.
All right. Very good. Bye-bye.